Hey, good afternoon, everyone. It is Tuesday afternoon at 2 o'clock. With the weather that's coming in, we're expecting a lot of delays and things like that tomorrow. So just to be on the safe side and make sure that we don't lose power and can't get the internet going or something like that in the morning, we're going to go ahead and record this now, and this will count as market chat for the week. So lots going on, right? You've seen soybeans just absolutely tear higher over the last couple of weeks. You've seen corn have increased volatility. You've seen wheat get more volatile, and you see headlines just all over the place regarding South American production and the drought and the rain and floods. And you've seen Russia invading. Will they? Will they not? The dollar moving all around, the Fed talking about raising interest rates. There's just a lot of stuff that is that's really hard to digest. And so let's take a minute and take a step back and make it as simple as we can, because I think the market's been really clear what it's been telling us for a really long time. If we go back all the way back to the highs of the summer, right, all the way back to June, and we talk about what has transpired all the way through this growing season, right? What did we talk about during this big down move? Well, we talked about the fact that Brazil was going to grow a monster crop. They're going to plant all the acres. They're going to overwhelm the supply, and then fertilizer costs are going to drive corn acres away, and corn is just going to puke acres up to beans. And we're just going to drown the market in soybeans because we're going to have another record yield. And oh, by the way, this was our growing season, so our 21 crop was going to be a record. And we're just going to overwhelm the market with supply, and we're going to increase our carryout to a point where we have to take this market back to $6 because we got to go create new demand, right? That's what the headlines have been all the way through. But nothing about the technicals have said anything other than this has been counter trend. The technicals have been very, very clear that there just simply wasn't enough to really break this market and take it lower. And so for the last several weeks, we've been talking about upward targets, and I think a lot of people thought, oh, that's just we're being Pollyanna, we're being overly aggressive. But look, if you draw a reverse Fibonacci target off of this low, which measures from the peak from June to the extent of this decline, and then extrapolates it back up to a 38.2% extension, and then on up, you can see exactly where we've traded to, right? Now, I think we said this a couple of months ago. We don't know what the news will be that will cause it to happen. But this is what the technical setup has been. We never meaningfully broke longer-term cloud support. We never meaningfully broke on any of our oscillators. We never had a divergence. We just never got a great sell setup at any point during this time. And so now here we are, and we're sitting, basically 90 cents above the old peak, and we've done it in 6 days. And so we have rallied this market in the last 11 days $2 a bushel, and we've rallied it more than $3 a bushel from the early November low. Okay, so this thing has just exploded higher, and the question everyone's got to be asking is, now what? Read the news. Read the news and compare it to what the news was saying back in here, in contrast to what we were saying. Back in here, we had overwhelming supply, never another good day for soybeans. Oh my gosh, woe is us. And now you fast forward and you start reading the news, and what you see is, oh my gosh, South America's in a drought. We burnt them up. And oh my gosh, our domestic demand is better than we thought it was. And oh my gosh, China's buying soybeans again. We're starting to see all those headlines happen at the end of this $3 rally. Now, I'm not saying that this thing is done, but there's a couple of things on here that caused us to start selling old crop today. We hadn't made any old crop sales at any point in time prior to today, unless it was for cash flow needs or some other reason. But today we started making some sales, and the reason is that that this is the highest that this force index has been since the rally began in 2020. So we have an overbought condition and just an extreme uh, move to the upside. The next thing that I wanted to look at is the MACD. The MACD is starting to show signs that it might be getting ready to diverge. So if we fail to take out this histogram and make new highs, then this would qualify as a divergence. It hadn't happened yet, but if you're getting a warning sign of a divergence with an extreme overbought right into a Fibonacci target with shorter term indicators and wave patterns in full divergences with completed structures, then I think that the odds favor that we're running out of steam or will shortly. A lot more, the odds favor that under those setups. And I can keep showing you different indicators. You know, for instance, stochastics. Stochastics are starting to diverge. What is a divergence? A divergence is when the oscillator fails to reach new highs along with price. So here you have a high price and a high on the oscillator. Here you have a little divergence, right? And what followed after that was a sell-off. Here you have yet a higher high but a lower high on the indicator. So you've got a small divergence here, and with force index you've got a big blow off top. So now let's look at our RSI indicator, something that most people like to look at. The RSI isn't quite diverging, but it is matching the previous highs. I think as the RSI continues to get overbought, this move is going to start to lose its momentum. Another indicator that we like to use are the Bollinger Bands. Now, Bollinger Bands in grains, you've got to modify those slightly and get them to a 3 standard deviation, because if you just look back and look at these things in history, 3 standard deviations is kind of the mark. Now, these Bollinger Bands, we're touching them. So at today's fib peak, we're touching the 3 standard deviation upper band line, which would generally call for consolidation and then or retracement. Now, I'm not bearish soybeans. Don't get me wrong. I really think that beans are going to go explode on up to new highs, and I think that we're actually going to go to all-time new highs on beans. And the reason for that is simple. We don't have enough supply in planet Earth to meet the demand. We have to ration demand, because it's now becoming very clear that the crop in South America is going to be somewhere between 600 million and a billion bushels short of what the USDA said it was and what's currently priced into our balance sheet. So some of this move is no doubt trying to price that in, but if we really are that short, then not only do we have to price it in, we also have to exterminate demand, which is not going to happen, because we talked last week that as we've moved up, our end user margin has actually expanded in the face of the raw input price increase. So we have not slowed anything down. You know, if we look at the let me get this cloud off of here. You know, we're breaking out of the cloud. That's definitely not bearish. If we look at this chart, you know, there's nothing between here and 1622, which would be this peak, and then you would expect the challenge of 1678. So I'm absolutely not bearish in any way, shape, or form the soybean market. But on the shorter term charts, it looks like we may be running into a little bit of a headwind, and something that we could certainly pull back from and need to gather some steam before we work ourselves higher. And then the other thing that's given me pause is the fact that everybody and their dog now is talking about the short supply situation, and that really makes me nervous. I had a lot more confidence in that argument back here when nobody was talking about it. But now that we've got it, I think we got to be a little bit more prudent. So we took a little bit of risk off the table today by selling half of our old crop. You know, if we pop up to 16 or 16 somewhere in here and start to get a little bit weaker, we're going to take the rest of it off, and then we'll look buy it again on a break. But when you move this far, this fast, the break is going to be pretty steep. It could easily look like this, right? And we don't want to sit through that. We'd much rather be out, keep our powder dry, and be ready to buy it. All right, so that's what's going on in soybeans. We shouldn't be surprised by this move because we've been talking about it for a long time, and we're happy to see it here, and we're happy to be participating in it. And now let's look at corn and wheat, because those two markets really haven't yet performed. So put in your mind these numbers, okay? This blue line in the word magnet and this 1.382%, okay? And I want to show you the same analysis on corn and on wheat as we just did on beans. All right, so let me pull this together here so you can see it a little bit more clearly. Okay, so if we go to the low of the summer, which was set on September the 10th, we bottomed, and we are up from the low. We're up $1.35. If you put these Fibonacci extensions from that low, here's our magnet word, and you can see exactly where we're trading. Remember where soybeans were. I'll flip back over there so you can remember it. This is where soybeans were 3 days ago. They came to our magnet, and they fought it, and they oscillated around it for just a day or two. And now look what corn is doing. It's come right up to it. It's oscillating around it here for just a minute. I think it's just gathering steam before it explodes on up to its 1.382% retracement or extension off of this decay from the summer peak down into here. I think corn is going to follow suit. Why do I think it's going to follow? Because look what beans just did, and look at the news flow surrounding it. Remember, we've got an acreage battle coming. You've got demand off the charts. You have end user margin expansion, not contraction, and we haven't slowed down grind at all. So if the crop in South America is getting smaller to the tune of 350 or 500 million bushels of corn as well, then China and the rest of the world have to come here to supplement it in a market that's already hot here. So we must resolve that with higher prices. I think corn is simply getting ready to explode up into that. Now, if beans turn around and break and come back off, corn might come down and kind of test this zone right in here, but we're not going to roll over and put ourselves into a giant bear market with the current situation. There's just, I don't want to say there's no way that doesn't happen, but the odds of that are extremely low basis demand and the current supply situation if South America is that small. We just don't have the acreage base. We've got to go bid up for them, and we've got to rally it. Now let's look a little further out. Let's look at the May contract. Same situation. We've based right around the magnet line. We've consolidated around it. We broke it. We tested it. Today we bounced back off of it. I would not be a bit surprised to see corn go ahead and explode on up in May, up to the $6.80, $7 a bushel handle. And I think we're going to continue to invert the market and make that even more extreme than it already is, because that's how you have to ration it. You've got to kill it on the front side. And look at your force index down here too. You're down into the buy zone. You're right into the neutral territory where you want to be, so that you can explode it higher and get back up into all-time or contract life highs on that market as well. If you look at wheat is doing nearly the same thing. It's been oscillating back and forth, but one of the ways that you can distinguish between primary direction and corrective price action is by drawing these trend channels. And when you see price action that's bouncing between two channels like this, it's corrective. When you see price action that explodes up out of channels like this, let me show you one. Here's a trend channel on soybeans. I'm going to connect this line to here. We'll put this right over here, and you can see we blew up out the side of it, and now we've just exploded. So what you're looking for in an impulsive action, an impulsive move, in a truly trending move versus a counter trend move, is this. You're looking for it to break out of the top of a trend channel and then move on higher. So if you look at, let's come back to wheat, and you snap from the peak to the first retracement, we have traded inside this parallel line, and we've stayed inside of it, with the exception of 1 day right here, which 1 day is fine. It's not a big deal because we immediately turned around and traded back inside of it. So now what we're counting here is a 1-2, 1-2 with a magnet retracement back up to this 877 level with a extension up to 950 and 985. So if you put the whole story together and you lead with beans and you assume that they're not going to just break and come all the way down, and that they're in fact going to new highs, you've got to assume that corn's going to go with it because it can't afford to give up the acreage. Okay, so it's got to go too. And then if you follow that logic consistently, wheat cannot break because it can't get cheaper than corn. So because we don't have enough to feed, and that's going to be the thesis here until we actually start to ration some sort of demand. And if you look at our oscillators, this is consistent with this analysis here too on wheat, because we've rallied, we've come right back to our zero line, we're right on our zero line, we've got no divergences to speak of, and wheat is getting ready to wheat should be getting ready to blow back up higher. I don't think this has anything to do with Russia. I don't think it has anything to do with imports and exports. I think it just has to do with commodity flow and the price of corn and soybeans. I think wheat's got to play its part, and it's got to outpace corn because otherwise it's going to get fed. So we're bullish. We're bullish wheat. We thought it had reversed here. I think it's reversed today. I think that low's in. If it comes all the way back down and tests this line one more time, that honestly doesn't even change the analysis unless corn, something materializes and corn and beans just break horribly. So in conclusion, right, I think corn is getting ready to explode. I think the news that'll cause that to happen is once people realize that if the soybean crop in South America got burned up, then also the first corn crop got burned up as well, because they're growing at the same time in the same region. And if that first one got burnt up and there's drought conditions, then the next big one has you got to start putting some weather premium into that too. So I think corn could really get hot in the coming days. So that's why we're not recommending any selling action or taking any evasive action in corn yet as we go. If we can get a similar move to beans, then we'll take action at the same line up here too and start reducing some risk. But I think all things are looking up, even though soybeans are getting a little bit extended. Think about it though. Beans could actually reverse or sell off and come all the way down $1 and stay above this trend channel and then blow up to new highs, and not damage this chart one bit. So I think you gotta just stay back, keep being patient, trim risk into the big moves as we go. And once we're done selling old crop, then we're going to start selling new crop, and we're just going to keep selling it all the way up and try to capture as much of this move as we can for as many crop years at once as we can. All right, that is Market Chat. Remember, there is obviously tremendous risk in trading futures and options, and you should only do so in light of your own financial condition. If you have questions or concerns or want to talk through things any deeper, please don't hesitate to reach out and give us a call. We'll talk to you next week. Have a great week.